Today, I want to go over some actionable steps that you guys could take that could increase your profitability with the least amount of work, because a lot of you guys are making these stupid mistakes that are so small, but they're actually hurting your profitability. And what I'm about to tell you is a couple actionable steps to take that will take your profitability from looking like this on your chart to looking like this. Now, the first actionable step that we want to take today is taking the best and leaving the rest. That is the first actionable step today. And this is super important because your win rate is suffering because you're taking these B setups, C setups, when you want to take the best and leave the rest, meaning you're only taking these A plus setups. So instead of having a win rate that's like 30-40%, if you're more selective about what you're taking and you're taking less trades, that actually will increase your profitability and win rate and actually make you more money because you're taking the best and you're losing less. This requires less work than taking more trades, and this will increase your profitability more. So you guys want to be very selective about the trades you guys are taking. The second point is you can't fix anything that you don't know is there, meaning you can't identify a weakness in your trading plan or your trading if you don't know that there's a weakness there. And the only way to do it is to track your trades. A lot of you guys take a trade, don't even think about it, and that's it. You wait for the next trade and you forget about it. And then you wait for the next trade and then you forget about it. What you guys are not understanding is the only way to improve is to know what to improve on. And the only way to do that is to journal and just watch your trades back, seeing what you're doing wrong so you can figure out what your weakness is and figure out what to actually improve from there. You need to know what to fix in order to fix it. A lot of you guys are getting lazy when it comes to trading, and you guys really need to take a step back, look at the journal, look at the numbers that are coming in, and figure out your weakness points. An example of me looking back at my journal and I see that my risk to reward is low is knowing that there's only two different things that make my risk to reward low. It's either I'm not holding my winners long enough or I'm holding my losers way too long. So I'm going to look back and look at my trades to see every time I sell my winner, does it keep going by how much? And if I see that, let's say I sell at 10% every single time and 95% of the time they go to 15%, I just left 50% more profits on the table. So then I'm going to take that data and start holding for 15% to see how that impacts my trading and how that impacts my profitability. And that's just one example. And another actionable step, which requires little to no work, is recording your trades. Listen, all you guys gotta do is click the record button and that's it. Right? You guys don't understand, if you're not doing it already, by just clicking that record button and watching the trade over, you're going to identify some stuff that you actually didn't know was a weakness in your trading by just watching it back, seeing what you could have done differently, writing down your mistakes, and creating some sort of just actionable step in your head to take that mistake and make sure it doesn't happen again. You guys should not be creating the same mistakes and making the same mistakes over and over and over again because you identified your weakness and you're not learning from it because you're not even accounting for it. Trading is a numbers game and it's just leveling up your stats. That's it. If you get good at trading, you'll make money. If you suck at trading, you're not going to make money. The only way to not suck is to do these actionable steps. The next major problem that I see a lot of you guys are having is overtrading. How do we stop overtrading? Have a cutoff time. If you guys have a cutoff time of, let's say you guys see, and this goes back to journaling, you guys see that after 11 o'clock, your profitability decreases by, let's say 30%, maybe stop trading after that certain time and see your profitability increase. So maybe have a cutoff time. After 11 o'clock, I don't take a trade. Usually after 10:30, I don't take a trade, but the cutoff time for me is 11 o'clock. After 11 o'clock, you will rarely see me take another trade. Something that requires less work than taking a trade that will actually increase your profitability. Now, another thing that helped me tremendously is I used to overtrade. And a way that I found how to not overtrade is by having access to less capital on my account so I can't literally overtrade, right? The only way you could overtrade is by having access to capital to overtrade. So if I figure out how to decrease my capital, I won't overtrade. And it sounds easier than it said. Let me go over an example. So having less capital in your account. What does that mean? So for example, and you have to base it off your risk. Let's say I'm comfortable risking $500 every single trade. Usually the standard on YouTube is, okay, now every position size. So let's say this is, I don't know, 20%. So this is going to be a 20% loss. So this means that I have a $2,500 position size. The standard on YouTube is your position size needs to be 10% of your account size, which means on YouTube, everyone says that you would need a $25,000 account to have a position size of 2,500. And it's like, that's stupid. And I'll tell you why. You guys are telling everyone to give yourself access to way more capital so you could start to overtrade, which makes zero sense. For me, for example, at most I will take is 2 trades per day. And if I am comfortable risking $500 per trade with a 20% stop loss and my position size is $2,500, I mean, what's the reasoning for having more than $5,000 in my account, right? Let's give it a little buffer. Let's say $6,000 just in case I start off the week with like a loss or something. With this, I take 2 trades, which is $5,000, and I'll have like a little buffer of $1,000 just in case this goes down in the beginning of the week. But even though I'm using 50% of my account, I'm just sizing down this $25,000 account into $6,000, so I have $19,000 less capital that I could access, so I don't overtrade with that 19 extra $1,000. But I'm keeping the same risk. But oh no, my position size is 50% of my account. All these YouTube gurus, oh, they told you not to do it. You don't know the back end, right? Like, it just doesn't make sense. You don't know the why, and I don't know why that's a standard, but this actually helped me to become profitable by giving myself less access to less capital, but keeping the same risk. And especially because I only take 2 trades per day. If I have a $500 risk, $2,500 position size with a negative 20% stop loss, even though my stop loss is way lower than that, I should only give myself access to $6,000. It's just smarter that way. And a lot of people just base stuff off of people that aren't even profitable. But listen, it just feels like I'm very unorthodox. Don't just follow rules blindly. 10% position size of your account when it doesn't even make that much sense. And the very last thing is FOMO. I can't tell you guys how many times someone sees a stock running and then they'll just enter because they see it running. Past price action does not indicate that it's just going to continue like that, right? You have less of a probability as that stock is coming up that it's going to continue higher. You're literally basing previous price action that already happened for a future result, which it really doesn't make sense, because I'll use previous price action to see how price has been reacting, to see if momentum has been coming in or if it's been slow or it's been choppy, but I'll never see price going crazy and I'm like, oh, I got to enter. Because a lot of times you guys are going to enter at the top, comes back down, you're like, oh my gosh, the market's rigged. No, you're just getting FOMO and reacting with emotions. And you know, honestly, I'll add another one. Stop reacting with emotions and react logically. React based off your plan. Your plan did not tell you to get in at the top of this move after this huge extended move. And if it did, then you just got to figure out how to redo your plan. Next time you get in a trade, you have to think to yourself, am I getting in because I'm emotional? Am I getting in because I want to make more money? Because emotions equals money. The only reason why you're emotional when you're trading is because money is involved. So if you're able to figure out how to separate your mindset from the money, then you won't be emotional. So next time you're about to enter a trade and you feel your heart racing, are you getting in based off your logical plan, or are you getting in because you're emotional and you just want more money, or you're trying to recover a loss that you just took? So there's some actionable steps for you guys to take. If you guys enjoyed this or found any value, make sure you guys subscribe, leave a like. I also have a free side of my Discord. The link is in the description below. It's literally free. Join it and hope to see you guys in there.